Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how markets are reacting to the progress of reopening the economy. And Phil, we have a big week on tap for investors. A third of the S&P reports. We have some commodities moving. Congress is looking to deliver a stimulus package. And with all that happening this week, if we look at action from last week, it was relatively unchanged going into all this.
Yeah, last week was kind of an interesting week. It started off with some positive news. We had some decent news on a lot of different vaccines. Moderna was talking about phase 3 trials, and the European Union passed a $2 trillion stimulus, which got us off to a great start. But then by the end of the week, we had some more China fears with developments in the South China Sea and with Hong Kong, in addition to the tariff war that's been going on for ages. And also the employment data came out, which was not good because new claims actually ticked back up to 1.4 million, which is way above the old average of 200,000, but also above the level we saw by 100,000 the week before. So sort of news to support the fact that the spikes in cases that we've been talking about in the southwestern states, the reversals of openings in those states have actually now started to filter through into employment as well, making more job losses and maybe longer term job losses more likely as well.
Yeah, and as I mentioned, we have a lot to look forward to this week. Congress just has days to reach a stimulus package. The EU reached a $2 trillion agreement, but between the vaccine news, you have a third of S&P 500 companies still delivering earnings. I think 32 Nasdaq 100 companies are reporting, and then you have CEOs testifying today. There is so much for traders and investors to digest and parse out this week.
Yeah, lots of stock-specific news, and hopefully, I guess, it takes our eye a little bit away from coronavirus, because in reality, the coronavirus news isn't changing that fast. We can see some of the caseload data that came through on the weekend. It's kind of hovering around the same levels we've been talking about for a week or two now, hasn't it? The 60 to 70,000 new cases a day. I mean, it's not a pretty number, but that seems to be holding steady, which seems to show that some of the shutdowns that we've seen in the US are starting to work. And provided that continues, we can get the cases under control. That's important because one thing we have started to see in the last couple of weeks is the mortality or death rate in the US is starting to tick up, but it's still nowhere near the levels we had when we were in the New York City and sort of Northeast shutdowns. So although we've got way more cases being reported right now, we've got still a lot less deaths, which I think you could probably put back to the fact that we've got a lot more testing going on now. We're finding the cases faster. We're finding more of the cases, so the denominator is actually a bigger number this time. And although it looks like a worse outbreak in the southwestern states, the data on hospitalizations looks roughly the same as New York and the death rate. So maybe we've learned a little bit about how to deal with getting people back into society and out of hospitals is actually looking a lot better so far.
Well, yeah, that's why when people say the U.S. has the highest numbers, it's because it's testing the most. It's kind of an ignorant statement because we want to see more testing so that mortality rate isn't so extreme. So it's a good thing that we're testing, and hopefully that continues to improve in terms of how long it takes to get test results back. But let's wrap up with fund flows, seeing a lot of precious metal activity last week.
Yeah, so as you know, we've been running this like top ETFs list now for weeks, and we've seen a lot of different thematics playing out through the ETF world. So what we're doing here is we're looking at ETFs that have either seen a lot of asset changes, growth or shrinkage, a lot of volume trading relative to normal, and also some price returns that are interesting to look at. And we've ranked them based on a combination of those factors. And we've seen the energy complex, we've seen a lot of the innovator and online retail funds as different thematics. We've seen the value trade coming through, but this week it is all about precious metals. I mean, it's just amazing to look at this list, and the top 20 is almost all something to do with silver or gold or mining of those metals. So with the gold prices hitting pretty close to all-time highs, inflation adjusted, it's getting close to the levels of 1980. But clearly there is a play going on, and usually a precious metals play is a bit of a safety trade at the moment with precious metals more broadly, and you can see that across this spectrum. I guess just for investors in ETFs, one thing to keep in mind is if you're buying the miners, they are obviously digging the metals up and selling them, so they have a little bit of leverage to the metal price going up because they're able to sell the metal for more. They also pay dividends because they earn revenues off that. But it's not as pure a play as owning the actual metal itself.
All right, Phil, thanks for joining us as always on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.